the people that are trading platinum are those that are trading gold. And there's a fair, well, in fact, there's a very strong correlation between the two prices. And those that are trading it know that if gold moves up $20 or $30, platinum's probably going to move up 40 or 50.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and excited today to have an old friend, Trevor Raymond, who I think we met up at the Sprott Show for the first time a couple of years ago, and missed seeing you there this year. But Trevor is running the World Platinum Investment Council. I'll pull up the platinum chart today. It's an asset I'm certainly quite intrigued by. I have some interesting thoughts on it. Fortunately, we have the expert here today. Looks like about $880, $890. So Trevor, great to welcome you in here. Thanks for coming back on the show. And how's everything going today?
Hey, Chris, pleasure to be with you and good to talk. As you said, the last time we spoke was a year ago at the Sprott conference in Vancouver, and certainly a lot has happened since then. So yeah, good to be talking platinum, and let's try and unpack it a bit for your viewers.
Yeah, well, why don't we start off, again, I'll pull up the short-term chart, and maybe as you can give us an overview, I'll pull up a little bit of a longer-term one, because we've seen all of the metals have quite a lot of volatility. Certainly people like myself saw palladium get up, was it as high as 2,800? But
correct. Yeah.
Wondering, when platinum might catch up. And as I pull up the charts, maybe you can just give us an overview of what's going on.
Sure. So I think it's relevant. And I think if we look back to March, in about the 19th of March, we had the lows where everything collapsed. Obviously, gold fell less than the rest, and platinum certainly fell. And what we've seen from about the 19th of March, gold is up about 33%, platinum's up about 55%. And as you showed that short-term chart earlier, what you've got is platinum bouncing around between sort of 850 and 950. And I think the main reason, Chris, is that the people that are trading platinum are those that are trading gold. And there's a fair, well, in fact, there's a very strong correlation between the two prices. And those that are trading it know that if gold moves up $20 or $30, platinum's probably going to move up 40 or 50. So there's a fairly trusted trade, a lot of algo-driven trades that are keeping the platinum moving in that range. The interesting part is why platinum outperformed gold from March to now. And in fact, we saw that in 2008, after the last crisis. And between 2008 and 2010, platinum actually outperformed gold on weekly returns by between 30 and 60%. And the reason is that, probably gold is commented on by hundreds, if not thousands of commentators. It is usually pretty fully priced. It reacts to macro issues as expected. But platinum is certainly at a massive discount to it. So there is a belief that platinum needs an inflection point. There needs to be something that changes that'll bring investors back in. Now, there's two dominant effects. One is the ETF holders. That's been a massive increase since March. The NYMEX or COMEX positioning has been particularly weak. And both of those two are kind of resulted from what happened earlier in the year to do with COVID. So maybe can I just back up and sort of give a view on what COVID's done to the platinum market, because that's certainly impacted what happened on COMEX.
Yeah, please.
I think the easy ones to assume is that with COVID, there would be a loss of sale of vehicles globally, and that resulted in less vehicle sales, less catalysts, particularly in diesel vehicles, and a drop in demand, some fall in jewelry, as well as industrial. So we had a significant drop in demand, but the drop in demand actually turned out to be less than the drop in supply. So supply comes mainly from South Africa and from recycled material, mainly from catalysts at the end of the life of a vehicle. And what COVID did is it stopped international flights, and it stopped the collection and processing of a lot of recycled materials. So recycle was down. South Africa also had a very strict lockdown. They closed their international borders for a couple of months to control the pandemic, and they achieved that very well. But they had significant lockdowns on their minds. And then an unexpected, fortuitous co-event was that Anglo-American Platinum, the largest producer, has a converter plant, and they have 4 smelters, and all the material from those smelters go through the converter plant, and it had a major catastrophic failure. So that took out about 550,000 ounces of platinum supply, and there's about another 400,000 ounces that was taken out of COVID-related mining shutdowns. So what you had was that supply fell by just over 1 million ounces, demand fell by just less than 1 million ounces, and as you mentioned, we have a deficit in 2019. So that's sort of what played out. I think the interesting part was what happened in the early part of the year. In the first quarter, we saw over 300,000 ounces of bar and coin demand. And that was as mainly Japanese as expected, but strong US investors buying platinum bars and coins, and they pretty much sold out in April. And then I think the most influential thing was the NYMEX futures exchange. And what happened there is that you had a blowout in the EFPs, the exchange for physical. That delta between the spot market and the futures went up to about $75 an ounce. Now, Chris, most of those holders and participants in the NYMEX futures market never intend to take delivery of metal, never intend to pay fully and have that settled. Most of them are rolled or cash settled. But what happened is that the market makers in that market sit mainly with large platinum bars. In fact, your background is a good example of those large platinum bars. They're pretty ugly, industrial looking bars of about 6 kilograms.
Yeah, they look beautiful.
Well, they're all beautiful. I'm biased. So what happened is that the market makers, the bullion banks that own those large bars that typically sit in London and Zurich, their compliance team said, well, this is great. You've got the metal to back the short, but how are you going to get it to the US was the first problem, because there were no flights. And secondly, it was in the wrong form. NYMEX would only accept 50-ounce good delivery bars. So what you might have seen is that in conjunction with that $75 an ounce blowout on the EFP cost, you also had the lease rate of platinum that had been sitting below 0 or at about 0.2%, blowing out to 7%. And what happened is a lot of people were leasing large bars, and instead of taking a $75 hit, they got the refineries in Switzerland to take the large bar, melt it down, and produce a good delivery 50-ounce bar and ship that across to NYMEX. And we saw over 400,000 ounces of those bars go through in the first 2 quarters. We've seen that continue. So the bad news is that those refineries were close to northern Italy that was hit by COVID very hard, and they had to shut down. And when they reopened with COVID limitations, they focused on producing silver and gold products, and they were making those 50-ounce bars. So what it did is that the spread across that, so the people that bought the bars, if you look at the export data from Switzerland to the US, those bars moved across, and it brought down that EFP spread considerably, and it's made it easier for people to participate in the futures market. But what that did do is it depressed the price and prevented it from responding, because the short-term platinum price is highly correlated to that futures open position. So what we saw was that there was lack of participation, and the platinum price stayed stagnant and has sat in that range bound following gold quite closely. So the good news is there's now over 500,000 ounces of 50-ounce bars in existence. The market makers are back in, the EFP spread is right down. So participation in the NYMEX futures market is now much more easy, and we think that'll be good for the platinum price. So that was an interesting dynamic. The other one was that because there was no platinum product, every platinum bar and coin in the US that sold out, we probably would have had greater demand in the second and third quarter than we have had. However, it's still been strong. What we're seeing now, some of that product, physical bars and coins, is coming back to meet the pent-up demand. Does that kind of track with what you've been hearing in the market, Chris?
Yeah, in fact, there's so many great things you said there that I don't even know where to begin. Perhaps first of all, you mentioned the ETF demand. So let's take a look at that. This is interesting. This is the last 10 years, weekly transparent platinum holdings. You see certainly this year, a lot of activity. Trevor, maybe you can tell me what this big spike was back there. Maybe that was the launch of a new trust, or?
There was. In fact, there was a South African trust that was launched with a metal vaulted in London. And between April 2013 and December 2013, it was about 900,000 ounces, nearly 1 million ounces that went into that ETF. That was one specific fund launched. And the main reason for that massive uptake was South Africa had some limitations on what they could invest in offshore funds, and that ETF qualified as an onshore investment. So that was a particular driver. The interesting thing is we haven't seen those kind of volumes until last year. We saw 1 million ounces go in over the year, largely from the big South African funds. This year it's been fascinating. From March to now, we've had over 500,000 ounces come from US investors. Now, those US investors, some of them have never owned platinum before, and it seems to be coming from two groups. One is the gold investors that saw $2,000 an ounce gold as a bit of a ceiling. So they switched some of their gold out of gold into platinum to then enjoy the benefit as platinum plays catch up with gold. And the other investors are those that have noticed platinum's key role in the hydrogen economy. And I think the COVID pandemic has highlighted the importance of that hydrogen economy. So we've got a couple of interesting reasons for people to want to own platinum that certainly haven't been around in the 5 years that we've been around, Chris.
Yeah, you can see that activity's been picking up here because, again, all right, here's where the trust was started. But if you take that out for a second, you see you had that lot of activity. This is going back 10 years. And then this year, quite a bit of demand. And you talked about the COMEX as well, which I have been pretty stunned by. Let's scroll down here to see platinum. There's palladium, where we've seen some big numbers recently. Here is platinum. And I'm assuming here we see 23, 17, 75. Those are the non-delivery months versus 431, 445. But then I remember in July, after we were seeing gold and silver set records, we see this 4,000 burger, and then, you know, getting close to 6,000 in October. I have a couple guys like David Morgan and David Jensen that dig into platinum and palladium more. They were pretty shocked by those numbers. What I mean, you talked about it a little, but would you consider this a run on the physical inventory, or what? How would you phrase it?
No, so I mean, I see it as kind of good news, but unusual. So for decades, literally, that those futures have traded with very little physical. And the reason, as I said earlier, nobody ever wanted to take delivery or to cash settle. So as a result, there were very few 50-ounce good delivery platinum bars in existence. These things just didn't exist. So what happened with this compliance issue is that there were these, over 500,000 ounces of these 50-ounce bars have been created. They are now available in the NYMEX vaults. And what that just means is that the comfort that the market maker can draw is that if somebody does want to take delivery or deliver against a short, then the metal is available. So I think those stocks, it's really, the metal existed in large bars in London or Zurich. That same metal now sits in 50-ounce bars in NYMEX. So the bullion bank is still happy to participate in the market and be a market maker, just it's in the right shape and form. So other than it being in the right place in the right form, and it never having been required before, all this means is that the market making is more efficient and people can participate. So hopefully that it's gone out. What you saw in the gold market, Chris, was that they agreed to take the 400-ounce bar instead of in addition to the 100-ounce. But within platinum, they left it at the 50. So I think this is just an indication that there's still good demand for the CME future, and that people will participate in it, and that's pretty good news. And I suppose the significant buying in the ETF, there's usually not much effect on price because of ETF buying, and the guys that buy the ETF tend to be long-term holders. So I think that's very good news and a very, very strong trend. So the other thing is that, so where to from here? What is the price likely to do? And I think that's where there was good reason that there was 1 million ounces of platinum that went into the ETF last year. And good reason why 500,000 has gone in this year. And that is the demand growth potential for platinum has changed. Probably for, I suppose, there's 2 or 3 dominant drivers. The one is, I think, are you showing the palladium positioning there, Chris? Or is that platinum?
This is platinum. Would you like to see palladium?
No, that's platinum. That's the one we've just been talking to. So
I was thinking, I'm like, I don't think Trevor would want to get into palladium here.
no, well, I'll tell you why palladium is so important is that one of the big deals is that the palladium price, as you said, went to 2,800. And remember, palladium and platinum are one-to-one substitutes in autocatalysis. So it's been our view that since 2018, when the price of palladium went above that of platinum, that substitution has commenced. There's been very little confirmation, but suddenly you're getting the sell side that are talking 700,000 ounces per annum of metal that'll substitute from the one market to the other. So it doesn't take the heat off the palladium market. And one of the reasons for the strong palladium price is China, and we can come back to that. But the other is that any substitution between the two certainly is influential in terms of platinum demand. So that substitution is one driver. I suppose the second driver is that what the massive cost of COVID has been to the global economy is that because of the high cost, what I think it's done is it's slowed down the transition from internal combustion engines to electric vehicles. There just isn't the funds to beef up the grids necessary to go 30 or 40% battery. So what has happened is that the governments have actually focused on hydrogen as a sustainable fuel and as a replacement for fossil fuels. So the decarbonization efforts, which are still necessary to address climate change, but there's no money to do it. So we've seen over 70 countries recognize, including the EU, recognize the importance of hydrogen and commit to decarbonization by 2050. So what this has done is that it's focused that platinum's needed in two ways. One is you need platinum for fuel cells in cars, and that's probably 8 or 7 years away. But platinum for fuel cells in heavy duty trucks, that's much nearer term. And platinum to be used in electrolyzers to produce green hydrogen, that is the big game changer. Because by producing hydrogen from renewable energy, renewable electrical energy, that's where you make it sustainable, and that's how you decarbonize and replace fossil fuels. And that debate has been significantly elevated during COVID and is continuing right now. And a lot of the gold investors that wanted to understand why they should consider investing in platinum, suddenly the link between platinum and the hydrogen economy has given them a good reason to do that. And we did that in China, in Shanghai in 2017. We opened our office there. And there were a lot more people in China saving for their retirement. And we needed to give them a long-term value proposition for platinum. So we joined the dots already in 2017 between platinum and the hydrogen economy. And most people who are saving for their retirement in China are well aware that hydrogen is essential for China's future. So they would have said, okay, because of platinum's role in the hydrogen economy, platinum should be worth a lot more when I retire. Great again for investment demand in China. So you've got this unusual development related to COVID that has suddenly given a lot more comfort to platinum investors and gold investors to own platinum. Don't know if that provides you with some context for what's looking like quite an interesting opportunity.
Yeah, it certainly is. And Trevor, I have one more thing I'd like to run by you. I know this might be a different area of it than you look at. So again, no right answer, but just any thoughts you have. And perhaps you'll bear with me, give me a minute to set this up for you. But something I've been studying that seems intriguing. See here from about 2011, we see the price about 1800. The gray line shows the price going down to the 900 where it is today. Yet you see the amount of metal that's in the ETFs steadily rising, which seems a little odd to me, although it reminds me here is the similar silver chart. There's silver at $50. We've only had more money printing since then, silver consistently being added, spiking up there, which again seems a little counterintuitive. And one of the things that, I'm not sure if you saw this, but I had a chance before he passed away to talk with one of the CFTC regulators who covered the investigation into silver manipulation. One of the intriguing things he mentioned was that in 2008, when all the metals got hammered in March, everyone I've ever talked to says that was just panic selling. Yet what leaves me having a hard time believing that is that, you know, you had investment banks failing. Fed's already doing massive historic interest rate cuts in those months leading up until March of 2008. When Bear Stearns fails, JP Morgan, who just paid $920 million for manipulating precious metals markets, those confessions did include platinum and palladium. And in silver, which is what I talked specifically to Bart about, he mentions that the combined position that JP Morgan took over was over the allowed limit. He gave them a waiver to reduce it. They came back, they had made it larger. And this is the price drops at the same time physical silver dealers said there was a shortage. You couldn't get silver anywhere around the world. That price drop occurred within 3 days of the JP Morgan deal, which, given those circumstances, sounded like a heck of a coincidence. And how that ties to palladium, this spike where it's $2,300 is 2 weeks before that deal. Again, you see how it drops. We saw in March how, I mean, much less than that one, but so, I mean, I think there is an impact to what's happening with the COMEX futures trading, which doesn't always match what's happening to underlying supply and demand. So anyway, if you have any thoughts or want to take any comments on any of that, I've actually been waiting a while to ask you this one. But
This is your killer question. And Chris, I'm ecstatic that you asked it, because you know a lot more about the silver market than I do, and I'm not going to go near as to why it fell, and I'm sure your reasons are accurate, certainly sound accurate to me. But the nice thing with platinum is that the unusual part of platinum is that it's got a very, very concentrated geographic supply. All of the on-purpose mined platinum comes out of Southern Africa. 80% comes from South Africa and Zimbabwe, and the other 20% comes as a byproduct from nickel mining in Russia and a little bit of palladium around the world. So what happened in the run-up to the global crisis was that firstly, commodities were all doing well, and a lot of people got into commodities, and a lot of people did invest in platinum. But the other thing that happened around then is that the number of diesel vehicles on Europe's roads was going from 30% to 50%. So there was a genuine compound demand growth for platinum in the automotive sector of 14% CAGR, and it just couldn't be met by South African growth in output. South African output had grown significantly over that period. So what you had when that happened is just before the 2008 run-up, there was a genuine demand from an industrial purpose for the metal in Europe. And what happened is that the South African electrical grid nearly fell over. And those platinum mines, because they tend to be shallow mines as opposed to the gold mines, so the gold mines use electricity to get really deep. The platinum mines are fairly shallow, but what they do is they use big, chunky power consumers for their smelters to smelt the product. So what happened when the electrical grid nearly fell over is that the platinum mines were the first guys that took all these smelters offline, had some associated failures. And that power grid nearly falling over meant that platinum couldn't come out of South Africa. So part of that spike was purely the expectation that the grid would take down this tiny footprint of platinum supply in the world. So that's what happened there. The fact that it was coincidental with the JP Morgan deal, I'm comfortable it was just fortuitous and coincidental. And that collapse in the price was more about the fact that the global crisis said that vehicle sales would collapse. Ford nearly fell over. They took platinum sponge that they were using to make vehicles and sold it into Switzerland. There was a lot of sponge converted into ingot in order to sell it. People were looking to go bankrupt, and they used platinum as liquidity. You look at the Osprey fund, there were a lot of funds that actually had to close because of redemptions. So I'm comfortable that collapse was an issue around global crisis and redemptions. The funny thing is, people talk about platinum being a laggard. Now, platinum got back to pre-crisis levels within several months, whereas copper took years to get back. And the reason was that the global crisis never happened in China. And China actually bought an extra 1 million ounces of platinum for jewelry, because they said, hey, no one in China lost their job. There were women going into jewelry stores happily buying platinum at $2,100 an ounce. And now it was sitting at $700. So the platinum jewelry manufacturers, mainly in Shenzhen near Hong Kong, they bought 1 million ounces. Gladly, the price went back up to $1,250, $1,260. They turned it into product. They sold jewelry, and they made more money out of increasing their stock levels than ever before. Now, fascinatingly, in 2014, when South Africa had a big strike, there was concerns about availability, and the industrial users in China bought a lot of metal because they were worried about availability. And COVID did both. So what COVID said is that the guys that are using platinum in China to make fiberglass, huge growing demand, they actually pull the fiber through platinum bushings. They said, hang on, we're worried. Suddenly Anglo Platinum wasn't exporting an ounce when their converter fell over. And then there was just no metal leaving the country because the airports were all closed. So those Chinese buyers that use it as an industrial metal imported the metal in directly. We saw a massive increase in imports into China. And the jewelry guys could remember 12 years ago, 2008, they made a killing and they saw the price sitting really low. So the massive imports into China exacerbated the shortage of metal. And that's what drove the price, what drove the shortage. The reason the price didn't go was because of the EFP blowout. So I think platinum, in a way, because of its unusual features, that it is a precious and it is an industrial, the same as silver, but it's got this very small production footprint and some critical strategic needs. You just can't make cars unless you have clean emissions. So that combination makes it actually quite a fascinating. The word I've heard the most frequently is disappointing. Why hasn't the price responded? So I think you've got a cleaner way of looking at it. And yeah, great to have the question. And I'm pleased that there's nothing to do with price manipulation. I think the bit of, as you mentioned, some of that manipulation that put court in a tailwind of that court case was just about the limits that were exceeded by some of the banks in terms of their own regulations, rather than somebody manipulating the platinum price prior to those trades. Does that kind of answer your question, Chris?
Yeah, I mean, it was a great answer, and I was just thinking, well, I guess that's the fortunate part, that I get to do the show and I can have a platinum expert to dig into that. Last thing before we wrap up, again, we did see on that chart that it in 2008 got up to about 2,300, about a third of that today, whereas gold close to its all-time highs. So perhaps last one for you. I assume you believe we're going to see good times ahead at some point in platinum?
Well, I mean, when we started 5 years ago, if you'd have told me that one, we'd have Dieselgate in the September, and two, the price would fall steadily for the next sort of 5 years, we probably wouldn't have done what we do. The fascinating thing was that Dieselgate was a big deal. People chose to not buy diesel cars and they bought gasoline cars, and that dropped automotive demand for platinum, and Chinese jewelry weakened considerably. So there was a genuine fall off in demand and the platinum price came down. The platinum price kept coming down to below gold, and as you say, a $1,000 discount to gold. One of the big drivers that was missed is that the global asset management industry has largely moved from active asset management to passive. We've seen trillions of dollars go. The industry that you and I are part of has been decimated. Fees have gone, and yield has gone. But as these trillions of dollars moved into passive, you needed index funds. And all of the commodity indexes contain gold, and none of the commodity indexes contain platinum. So the news flow and the anecdotes was that platinum was getting cheaper because diesel was dead, when in reality, platinum was less in demand than gold because of those index demands. So the demand for gold from passive asset management is what kept gold strong and pushed that discount for platinum lower. The other thing is, unfortunately, you've got many traders in their 30s, Chris, that have never seen the platinum price go up. And they believe it never will, because why would it? If something is around for 5 years, you believe it's the truth. So it's far easier to produce negative news flow to say, diesel's dead, platinum's in a surplus, it's not needed, no real demand growth, therefore we sell short. And that suddenly has been very different. So in the 5 years we've been doing this, suddenly, actually, the market looks like it's in deficit or balanced at least. 600,000 ounces of bar and coin demand, you can't kind of write that off like some people do with ETFs and say, well, that's just a stock flow. 600,000 ounces of bar and coin, that's an emotional purchase, very long holding periods. Suddenly substitution for palladium is a big deal because you've got 8 million ounces of palladium going, or 9 million ounces of palladium going into cars, and only 3 million into platinum. So at a 1-to-1 ratio, just a bit of substitution, big deal for platinum. Hydrogen economy, and certainly, if this transition between internal combustion and electric takes longer, there's a focus on that internal combustion tail. It must be the most CO2 efficient it can be. And a diesel mild hybrid emits 35% less CO2 than a gasoline vehicle. So suddenly all these drivers are saying, actually, it'll turn, but you haven't had the price move, but a NYMEX blip. But suddenly there seems to be a lot more people questioning why on earth is platinum $1,000 cheaper than gold and more than $1,000 cheaper than palladium. So yeah, let's watch the space. Let's have a chat in a couple of months and see if people recognize it. And I mean, there's a lot of people saying if you don't want to hold an equity or a US equity and you're looking for an alternative hard asset, gold has run, silver's run, copper's run. What hasn't run? Palladium's run. Platinum hasn't run. So it's actually, yeah, let's see how we go. Thanks for that last question, Chris.
Yeah, it's right on my list after silver. And by the way, one of our sponsors, Miles Franklin, does sell platinum. So folks, if there's anyone watching and you are interested in information or pricing on any platinum, you can email Arcadia at Miles Franklin. Although Trevor, before we wrap up, thank you so much. This is great on a very opaque market. I find those markets that people don't understand as well, you know, if you can understand them, is a great way to have an advantage. Can you let people know where they find your great site and can keep up with all the research that you guys put out here at the World?
So our website is platinuminvestment.com. We have a lot of partners like the Royal Mint, like AppMex. We know Miles Franklin very well. And the nice thing is that we kind of product agnostic and partner agnostic. We don't mind if you own, a bar from a Heraeus or a Degussa, or whether you hold a swap or a future or a platinum equity or an ETF. And we don't mind if it's the Royal Mint that sells you a coin or the Austrian Mint that sells you a platinum philharmonic. So, go onto our website. We try to, our winner is if people own platinum. So all we want to do is make sure people have got enough information to make informed investment decisions. You can sign up for free to our quarterly. All our research is free. It's MiFID compliant. So we look forward to, to providing a service, holding your hand, and don't miss the opportunity. Well, and we're not regulated to give financial advice. I forgot to put in the disclaimer up front.
Well, I appreciate what you do. And I think, at least for myself, and I know a lot of the investors that watch the show, we just want the information and get good information and decide what to do. So Trevor, I thank you for sharing all that with us. We'll have the link to your site and all that in the description field below. And folks at home watching, I thought it would actually be fun because Trevor was on, I believe that was 2019. It seems like longer ago.
Seems like a lifetime ago.
I want to hear what he said then and how it's played out. Well, that video is coming your way now.